Hello, and thank you for joining us today. We are so thrilled to have you here. Welcome to the Thrive Resources Leadership Development Live event, The Truth About Leadership in Private Equity. Today, we are joined by two of my favorite people in private equity, exceptional leaders, Joelle Marquis, the president of Arsenal Capital, and Sal Gagliardo, an operating partner at Arsenal Capital Partners. Together, they're going to share insider strategies to help you elevate your impact in private equity and thrive in leadership roles. Our agenda overview, I'm going to moderate today's discussion on three topics: the importance of talent in driving value for PE firms, building high-performance teams, and the operating partner model, which these two are well-versed in and we'll talk about. We are going to conclude with a Q&A session featuring questions submitted by our members in the Thrive community. So welcome to Joelle and Sal. I'm going to give a brief introduction on both of them. I've known Joelle since 2009. I've done work for her and Sal since I think 2011, so we go way back. Joelle has an early career in operations and human capital, which laid the groundwork for her strategic approach in private equity. She spent 2 decades at Arsenal, experience driving growth and operational excellence, which I can attest to through talent, strategy, and leadership. She has played a pivotal role in positioning Arsenal as a leader in private equity by prioritizing talent as a key driver of success. And she has deep knowledge in human capital, organizational development, and strategic planning, which aligns closely with Thrive's focus. She offers invaluable guidance for executives aspiring to excel in private equity leadership, emphasizing talent and organizational development. As for Sal, he has been an operating partner with Arsenal Partners for the industrial growth team since 2011. He has more than 25 years of experience in the industrial space, focusing on global M&A, technology, and operations. He's led multiple companies through the complete leveraged buyout, the LBO process, from targeting and diligence through exit. And he is integral to Arsenal, which is a leading private equity investment firm specializing in building market-leading industrial growth and healthcare companies. All right, thank you both for being here. I'm so excited to have you. Thanks for having us. We're going to start in talent strategy with Joelle. Joelle, how has Arsenal leveraged the talent strategy to drive returns?
Yeah, I would say, so our model, which I think is probably really relevant to the question, right, is a combination of investment professionals, which is obvious for the space that we're in, investment professionals, and then industry, operating, and investment are really the three components. And so we are really focused on where those three components come together, and we have an approach to human capital or talent strategy that I feel has been pretty unique because of the duration of time. So since the very beginning of the firm, we've had a really strong emphasis on how we interact with our portfolio companies, how we leverage our talent, both inside the firm as well as in the portfolio companies. We'd say in an overarching way, we've really taken a view around talent and human capital and said, look, we're putting this on par with financial capital. We all know that in the PE space, financial capital is king, but we also know that every business we acquire, every management team we talk to, and within our own firm, human capital is just as important as that financial capital. And I think we bring that to all of our investments. So that philosophy.
Right. You guys do amazing with pulling that talent lever. How would you translate Arsenal's talent strategy into actionable results for portfolio companies?
To me, it starts at the very first phase of the process, right? Which is there trust? Is there alignment between the board, between the private equity firm, ownership structure, if you will, and the portfolio company leadership? And if you've got a good, healthy relationship built on trust, there's open communication, a clear strategy for where the business is going, then you've got the makings for a good talent strategy. Your talent strategy has got to make sure that you are satisfying the strategic needs of the business, of the investment. And so paying keen attention to how are we going to execute on this strategy, not just what is the execution plan, but what is what is the right group of people to take us there?
Right.
Do we have them? Are we holding the bar high enough? I think there's also, it makes a lot of sense to take a look at the talent and continue to ask yourself, are these the people that we want to take us to exit?
Right.
At any point, if the answer to that is even leaning towards no,
Right.
I think Sal and I would full tell you, we learned ages ago, it's time to move on.
Yeah.
And so I think it's just paying keen attention to the caliber of talent that you have, the communication, the relationship with the portfolio company management solution, making those kinds of decisions. And then we do a really rigorous job of assessing the talent from the C-suite
Right.
and another layer deep in the organization, making sure not only do we have the right players, not only do we have the right positions, but what are the key organizational positions? So, we talk,
Right.
I think the industry talks a lot about A talent,
Yeah.
but what are the A positions?
Right.
What are the positions that if we didn't have it, we would really struggle? Or what are the positions that create a lot of leverage organizationally?
Right.
And how do we want to make sure we're paying a lot of attention to the folks who are in those
Right.
position roles? Because they may not fall in your C-suite.
Right. I remember in one case, they were actually mechanical engineers who were front lines and, driving part of the value, a big part of the value.
That's right. That's right. And so sometimes you can overlook them if you're just doing, kind of the typical 2x2
Right.
or a succession plan or something like that.
Yeah, and I thought it was a good point too that it sometimes is different leaders at the beginning than when the company scales and suddenly gets to a different. We've seen that a number of times.
Yeah, then there's a maturation curve, right, with the businesses. So if you're doing acquisitions, which I think we're at somewhere between 4 and 5 acquisitions for each of our businesses, then you've got to take into account is the
Right.
leader really the person who's going to be able to scale this.
Right. That's a great point. What advice would you offer to portfolio company leaders looking to enhance their talent strategy?
Yeah, I think so in terms of the talent strategy, one of the things I think is really key is what's the culture of the organization. Is it an organization that has components of trust built into it? Is there a genuine partnership among the leadership team in the organization? Do people feel like they can be, it's such an overused word these days, but transparent? Is there transparency? Are we communicating effectively up, down, and sideways in the organization? Because if those components are there, then I think your talent strategy has the right environment to thrive. So before I even ask that question, I'm really looking at the totality of the culture and the environment within which people are working.
Right.
And so I think once that's established, then you have also the ability to create followership from your people, right? I mean, the definition of a leader we often overlook is there has to be, in order for there to be somebody actively behaving as a leader. And so, those things help to build followership. And then a clear plan. We've got to have a really clear strategy and a detailed plan on how we're going to get there. And part of that plan needs to be, do we have the right people to get there?
Right.
And I think if it's a portfolio company leader looking and they've kind of got those things and they want to leverage those to the max, then I think it's really making sure that you're looking at the what people are doing, but also the behaviors with which they're doing them. And I think that's an often overlooked opportunity in all businesses, all organizations, but certainly in our portfolio companies, because we all know.
Well, private equity is it tends to be driven by results.
Right.
And speed, that's what I should have said.
Results. But the behavior to get there can be very damaging if it's the wrong behavior.
Right.
Getting there. So getting to the right results with the right behavior, it's difficult to do.
Yeah.
But you have to stay focused on that. And if that's not there, the leaders of the company need to know that, understand that, need to focus on that, and need to make the changes they need to make, because that will derail the company.
Yeah. Yeah, we've seen that with people who just roll over people to get their objectives and that, but they're not bringing people along, or they're, acting like a bull in a china shop, and it'll kill it.
The other thing that I would elaborate on is what I call the 5 Bs, right? So we think about buying our talent, right? So acquiring people, but we also have to bind the people who are really important to our organization. So how do we make sure we're able to retain people? We don't, lose the people who are key, particularly in A positions,
Right.
as I mentioned a little while ago. We have to bounce some people sometimes, And then we can borrow folks, right? We can borrow from the consultant population. We can borrow temps. We can borrow
Advisors.
from our some knowledge, et cetera, from our advisory group.
Yeah.
So I think, really paying attention to are we buying, building is the fifth one. Are we building our talent? Are we paying attention to development? And I'm sure you've got some questions for us on development. So those 5 things, if a leader is paying attention to them and really balancing out the use of those at the right time, I think that's another approach to strategic.
That's great.
talent.
That's great. How do you prioritize talent development at both the firm and portfolio company level?
Great
You
question.
open the door. There you go.
So I would say, we take our own medicine at the firm. So within the firm for 24 years, all of the 22 I've been there for sure. We do performance management with everybody in the firm. We do it twice a year. We do 360s. We have coaches. We have the very, very clear development plans for people through their careers, so they know what it really means to move from one step to the next in their career trajectory. I'm starting there because, we're not just going to preach it. We're going to do it. So, Sal and I both have development plans. We both work at them. In fact, we're in the midst of review season right now. And so similarly with the portfolio companies, I would say development is so important. We're building talent for the long haul, and we're doing that because we're going to exit the business in a period of time. Let's call it 5-6 years. Although it's extending a bit now in the market we've been in, but let's call it 5 or 6 years. We want to make sure that the talent group that we have in place when we go to exit is as strong as possible. And developing those people is one of the key ways to get there. And so so it starts at the beginning, which is identifying what the needs are for the role someone's in, for what the maturity and expectations are for that role at this point in time in that organization, because it's going to evolve over the whole period. And then giving people honest feedback about what's happening, how they're performing, but also we talked about behaviorally. How is it that they're doing what they're doing, not just what they're doing.
Right, that's great.
And this is one of those places where clarity is clear, and it's kind, and we need to make sure we're providing people with great clarity. Just a tremendous amount of as much visibility as we can into what the next steps are, and that's truly kind to them, whether it's constructive or it's positive feedback for people. So I would say really paying attention to what's in front of them today and then what could be tomorrow.
Right. That's excellent. I love that. Okay. And then last question for you in this section is, what role does talent strategy play in preparing a portfolio company for exit? So we kind of just hit on that. I don't know if you want to talk about it a little bit more.
Well,
because it really does impact the exit value.
It does. You want to jump that out? Where it starts is that I think we always start with the end in mind.
Right.
And so we're trying to move the talent along a trajectory to get us there, whether that's, whichever of the 5 Bs that is, we're moving the talent in a continuum towards the exit.
Yeah, so I would say exactly, we have the end in mind.
Right.
The value of our companies oftentimes is just the value of the team. So that we need to present a very meaningful, capable, and professional team that's sustainable team, ones that are going to grow with the next owners along the way. So aside from the work we do to build the talent to execute our objectives within the company, we need to know that we're passing on a company that has the right team, right capabilities to go expand, to go double or triple, whatever the objective seems to be with our next owner along the way. So we do keep the end in mind. And we continuously look at that team as we're getting through and closer to our exits to make sure we have the right group.
Yeah, and that can be a challenge because, like we said, if it's growing from here and then you're exiting here, it's not always the same team. And then if it's supposed to be the same team to go through the next cycle, it's not always, so it is about sort of pacing and making sure that you're keeping them developing or bouncing them and looking for their replacement early enough that it doesn't affect that exit.
Yeah. And I think advisors are a great wealth of mentorship, guidance, and they can kind of shine a light in some areas that people may not see otherwise.
Right. Yeah, that's a great point. You guys do a great job with advisory boards, where they really support the management teams I've seen. I think we're going to shift to the questions from our members. So we have a question from Manuel, who is one of our members, for Sal in particular. So with a new portfolio company, how do you engage the existing team on innovative ideas, yet without disrupting operations?
Yeah, that's a great question, right? Because we're always trying to advance, if not transform our businesses along the way, but we have a day job, right? And particularly on new companies. So it's a really sensitive time when you first acquire a company, right? You're first acquiring, you're onboarding the team, you're getting connection to how we do business together with the team. There tends to be a lot of just uncertainty and concern, and particularly for those who aren't familiar with private equity ownership. So
right.
It depends on where it comes from. So you need to do the blocking and tackling. You need to make sure that's secure. These are leveraged buyouts. It means we have meaningful debt we put on these businesses.
We need to do debt service.
We have commitments to our budgets and our performance. And so that's the number one priority coming out of the gates. We do a 100-day plan for our businesses, right, to make sure we establish all of the sort of core next steps. We get into the strategy side and we build value creation. That's the priorities. Secondly, then it goes, well, how do we transform this business? Right. Is it technology specific? Right? Is it a very significant M&A, sort of a strategic M&A plan or so? How do we commit to that? And that's where we look early on and we think about from a management perspective or from a firm perspective, how to bifurcate some of this, how to separate the day-to-day from where are we going to be putting our chips, how are we going to be investing in development of technology, development of whatever, business by other acquisitions. And we tend to try to separate some of those resources, at least kind of free some of those resources.
Yeah.
That's what the second thing we do is we look to our existing set of advisors and we're very connected out in the industry, and we can find others. So we find other advisory resources, and so whenever it takes to go plug in additionally where we need that to go support the development of those technologies as well. So we're thoughtful about it, but I would say this: we look to the leadership team as well, not just us, to kind of figure out this is a path we should be going down. We have a lot of conviction, a lot of understanding. We haven't been able to kind of really get backing and funding kind of, but we think this is somewhere we can get to, and then we kind of work our way through it.
That's excellent. Yeah.
Yeah, I would just add the clarity of who's doing what.
Yep.
So people aren't distracted by it. Sometimes it can be the shiny object, and people are distracted by it. And so just making sure that there's that the plan is
really doing it. Yeah, that's great. That's excellent. All right, great. And then he has another question for Joelle. How do you assess high-performing teams, human capital, and culture during due diligence and align them with the new vision and investment thesis?
So the deal team is really going in and working side by side. Some private equity firms will have a separate diligence team, but we like to make sure that the deal team is being equipped as much as possible with all of the intelligence they can, not just on the business, but from an EQ standpoint. How are people interacting? How are they communicating? What's the body language saying in a dinner? Who chose to ride with who is never sitting next to the other person? There's a whole series of things that you can pick up on. So the deal team really is who we're leaning on to do the diligence. Of course, they're supplemented by experts in various areas. So I would say that's that's an absolutely critical component. Out of the gate.
I just add one thing that, and then when we come back to investment committee and we present an opportunity, the business, the state of diligence or so, human capital assessment is always one of the priorities that we have to do. So it's not only that we're doing that in due course, but we're being
part of the decision
because we know we're coming back, and just as it goes to early on, having the right management team, the capabilities is going to be critical to underpin the investment. So we spend a lot of time even with investment committee to talk about what we have, where we think there's risks, where there's gaps or so, and it's just part of how we tend to do.
It's amazing. I mean, the talent being such an important piece of the value creation, it's amazing to me that everybody doesn't do that.
We're really glad they don't.
Oh, I know, you're right. Okay, so for both of you, we have a new member, Manoj, has asked a question. I am de facto CIO with a large organization's new venture. I have also been in a consulting role throughout my career. For a person with my background, how can I get into PE?
So, again, not all PE is the same, but there are certainly many, that have critical functional resources that support deal teams and support the firm and the portfolio companies. So, typical areas like IT and now sort of the extension of AI, data analytics, and some of the advanced tools that are out there. But certainly even just functional IT. Every single one of these companies, and it doesn't matter what business model you're in, whether they're manufacturing model, service, technology, doesn't matter. You've got IT infrastructure, whether it's cybersecurity, whether it's ERP systems, whether it's functional tools, advanced tools. It's critical. We typically have resources within companies, but again, if you're lower middle market, sometimes you don't know what you get or what to start. And it's probably one of our maybe most utilized, I would say, one of our most utilized functional resources at Arsenal is our IT resources. So now we have sets of select functional resources across both of our sectors. You can go to other bigger private equities that have full functional teams, the American Securities of the world, the KKRs of the world, or so, we'll have big functional teams. So that is certainly a way in.
Yep.
And the value of these resources today with technology that's driving the way it is pretty significant.
Yeah, definitely on the CIO side.
Yeah.
And I always say starting with a consulting engagement is a great way for him to try out PE and for PE first to try him out and see if it could be a fit.
Yeah.
All right, great. And then we have questions from Clint, a longtime member, for both of you. What frequency of interaction do you prefer with Portco leadership teams? Frequency of virtual meetings, frequency of reporting, etc.
Can I just frame it to begin with, though? There is a maturation cycle that happens, right? And we can hit reset on that maturation curve at any time. So if you've got best case scenario, you've got a leadership team that's mature, seasoned, work together, hitting their numbers, it's going to be less frequent.
Right.
If it's a newer person, newer leadership team, newer relationship between an operating partner and a CEO, new acquisition, it's going to be more often. And then there's everything in between.
Yeah.
So I just want to kind of
And if they're not hitting their numbers, it's quite often.
it can be multiple times a day, right? But it's just what kind of. I want to
Look, that's exactly right. I mean, most private equities will have some of the standard communication time, monthly reviews, quarterly board meetings or something. Joel is right. Onboarding, early state, major changes in the organization, acquisitions, integrations, sort of whatever it takes. I'll tell you this with regard to operating partners, though, what we strive for in this particular area, and that is what you're always looking for, if we get this right, is we're looking for the company, the CEO, to pick up the phone and call us. It's sooner than us picking up the phone to call.
That's great.
Because you're building that relationship, you're getting a sense between the operating partner and CEO, what matters most? Is that something that we should be talking about? That's something I should be or I could be asking about, and I know I can find some value to. So it really does matter. What we don't want to do is be in a position where we feel we need to pick up the phone and call to direct or so, because then you have a different issue and a different health. So that's really kind of fundamental it is. But as the business matures along the way and you have a good alignment on the plans and the execution plans, I have a standing call, for example. I have a standing call with all my CEOs once a week.
Yeah.
And it's a 30 or 45-minute call. Yeah. We tend to be able to use it up pretty well. If we don't need it, we don't need it. But then just as things go, it could be 5 times in a week or so.
It's depending on what's going on. And just no surprises ever.
It's collaborative. No surprises.
No surprises ever. How often do you compare Portco progress with original investment thesis and modify strategy based on changing market or geopolitical conditions? That's a great question.
From a firm-wide perspective, at least twice a year in a very formal way. So we have portfolio company reviews. Those are really rigorous processes of looking at the performance of the business. We're obviously measuring it on a monthly basis, and in some instances more frequently, depending on the KPIs and objectives of the company. But kind of high level answer is twice a year within the firm in a very, very formal way. Going back, looking at the strategy, because the question was the original investment thesis. Right. So going back, making sure that we are, from a strategic standpoint, aligned with that thesis still, or just something need to change. What is that?
Right.
And so that's a really intensive process that we go through. And then sometimes it could end up, if it's really complex, or we've had this difficult market, a really complicated and dynamic market space right now. In some of those instances, it might be that we do a full underwrite of the investment. Right. Let's start all the way back to the beginning, make sure it makes sense for us, and check A to Z again, rather than just taking, some temperature readings in various spots and checking it on us.
I'm sure you saw a lot of that over the past several years.
Yeah, I mean, I think everybody has, right?
Yeah,
From the beginnings of the COVID implications to
everything that's happened,
changes,
interest rates through the
war, interest changes, and just geographic trade policies, whatever it might be. It's been
so many
disruption in the markets that have impacted our businesses. Mm-hmm. Some negatively, some sort of positively.
There's some
opportunities where you needed to take advantage of opportunities. Yeah. Other places you need to really manage your risks.
Yeah.
So look, at the end of the day, we're the fiduciaries for these businesses, right? Yes, we have leadership teams and it's on them to run them, but if ultimately we're the fiduciaries for these, we're accountable to our investors, and our investors need their returns. They're responsible for providing pensions, right? People, school teachers and firefighters who wouldn't have a sense of the ability to retire otherwise, and endowment funds. And so we're making a lot of things possible for the world to run more smoothly. And so it's really important work to do shares.
Yeah, that's a great point. Okay, so what trends do you see coming in the near future as it relates to talent in private equity? AI impact, diversity, changes in needs based on longer hold periods and a tougher deal environment. What would you say?
I just say to play off of what we just said, what this world looks like today, and I'll even add another thing in terms of private equity, even what the cost and the multiples of entry into it's a very competitive space. Private equity has grown. The amount of capital under management is ridiculously large, and it's grown tremendously. So the competition has grown tremendously. But this is the fact that there's going to always be something in the market, in the changes, in cycles, whatever it might be. Our goal and what we focus on is strategies that are differentiate. How do we still find a way to create strategies and execute strategies in this environment? We as Arsenal, have not changed our expectations of returns. I would tell you that exactly what it was 20 years ago and what it is today. It's rigorous, and we have not changed it. We've not lowered the return expectations or so. We've kept it the same. And the challenge for us then is, how do we find the right way to work around these things? So getting to the point of then, what do we need? I mean, we need people who can be thinking that way and thinking through this and understanding. We're driving our depth. We're not a generalist investment group, right? We have 2 sectors only. There's subsectors to that, but we're looking to go deeper in understanding so that we can find the places that you can really play. You can play good and bad all day long. You can finding the right places, finding the way to do it, and then having the right team and capabilities to go execute that. That's how we focus on.
Yeah, having a really diverse team, and so for us, diverse skills, diverse background, diverse perspective on an industry or a subsector, and being able to bring, some energy or an angle to a conversation that somebody else in the room maybe can't bring to the conversation.
Right. That's great. That's great. And I do think you guys are ahead of the curve in focusing so much on talent early on, because it's stayed with you through and only grown and developed and become better, whereas a lot of people are sort of playing catch up. In what I see in sort of, after the crisis of 2009, I saw a lot more focus move towards, talent in the 2010, 11 and whatnot. So, and coming out of the gate with it was an advantage.
2 comments around that. I think a lot of firms did. I think it started out in other firms as recruiting. And not necessarily all the other components of talent and for certainly human capital. But the other thing I think that has helped us is we didn't build this massive human capital talent team. So we're a small, nimble team, but what we've done is educated the deal team.
Right.
We've really embodied and penetrated the skill set of talent strategy throughout the entire firm. You've got responsibility for it. I don't care what seat you sit in.
Yeah, that's true.
And I think that's a big differentiator we're able to benefit from.
That's amazing. Yep, that's great. What do you both wish you knew before you got into private equity? Sorry, I wasn't supposed to throw you any curveballs.
You know what? I'm going to cheat on this one. I'm going to cheat first, then you can go. So my entry into private equity was I was acquired.
Right. I love that.
I was a corporate guy. I worked for BASF, one of the biggest chemical companies in the world, and then kind of moved on to a smaller public company, but it was still not private equity. We carved out the division I was overseeing, and part because it was a bunch of parts and pieces of things. There wasn't a strategic particularly interested, so there was 12 private equity groups that showed up at the table, and none of us as a leadership team, we knew of private equity, but we really didn't know anything about it. And we were very excited because there was one group that happened to be sitting at the table that seemed to really get it and understand what we were. And we were rooting for them to acquire business, and luckily they did, and it turns out that was back in 2003. It was Arsenal Capital Partners. So I had the opportunity to have a great run, and we had a great run with that business, to work as an operator in the business for Arsenal Capital. And I will tell you this, that even back 20 years ago, the operating model, the way the human capital focuses, so it existed then. We refined it and developed it, evolved it, but it was there. So I had that opportunity to kind of see what this was about. The one thing that I learned quickly, which I got excited and energized about, is the pace.
Yeah.
It was the pace. It was the lack of any type of, pomp and circumstance. It's like, we need to make a decision, call the board on the phone, let's go make the decision, let's go make it happen. We were funded here. We were leveraged at the end of the day, all of a sudden looking at the cash that we needed to run the business, whether it's for capital or working capital, whatever it is. It's not like you can just call the treasurer of the corporate group and all of that. So it was really a different environment that you're operating the business. Either you sort of got it, you didn't get it. So I would say it's really understanding that pace. I would have said, if I didn't have lived it, I would say, boy, just understanding that this pace thing is way quicker than you might ever imagine. But I liked it and understand it. People need to understand that, because rationally you get it, but when you're sitting in the middle of it and you're working on multiple companies at one time along the way, yes, it's demandful.
Yeah. I think it kind of going along with the pace scenario that Sal mentioned is just making sure that you're ready to deliver on all fronts. This is a meritocracy-based industry, and lots of us thrive in meritocracy-based environments. And if people are being honest with themselves, not everybody does.
Right.
And so I think just being prepared for what that actually means on a day in and day out basis, on an individual level, would be helpful.
Rigorously honest with yourself about it. All right. Well, it flew by. I knew it was going to, but I really appreciate you both being here. This was so great. I learned stuff every time. I think it's amazing. A huge thank you to both of you for joining us. We really appreciate it. Our members appreciate it so much. Sharing all of your wisdom. Thank you to all of our members for joining us today. Engagement is what makes our community thrive.
Great.
Thank you all for being here.
Thanks, Suzanne.
That's great. Thank you.